Hi everybody, welcome back. Today we are tackling the really exciting topic of Washington State's sales tax and use tax. I know this is everybody's favorite topic, but if you are a business owner, whether you provide a retail product or service or not, there may still be some information in here that will be helpful for you. Couple of disclaimers. We are based here in Washington State. This covers Washington State. Every state is very different. Please don't rely on this for information for other states. This is also an overview. It's not designed to be specific advice to your situation, so please consult an accountant. So if you're selling products in general, you have to collect sales tax on those sales as long as they're sold within Washington State. This also applies to certain retail services like landscaping and construction and some others. We have the complete list if you need it. The sales tax rates here in the state vary from about 7.6% all the way up to 10.6% based on the location. It's not just based on the zip code, not just based on the city. You really have to have the address. So with that, dor.wa.gov does have a address lookup where you can enter the address that you're looking for, and it will tell you what the correct location code and rate are. There's also an app, so if you provide a retail service and you're out on location with the app, you can tap a button and it will geolocate you and tell you at your location what the location code and rate should be. Most important to track your sales by location. So in QuickBooks, when you're entering sales tax, choose the right location or have QuickBooks look it up by the address for you. But the most important thing is to be able to pull that information back out of your accounting system again so that when you file with Washington State Department of Revenue, you can break down how much of your sales went to Seattle versus Kirkland versus Linwood. Reseller permits, if you're selling something to someone who's going to turn around and resell it, they can give you their reseller permit. You need to keep that on file. In that case, you don't charge them sales tax. They're going to charge the customer sales tax in their transaction, and the state doesn't tax it twice in this case. Keep that reseller permit on file. Don't charge them sales tax and track the sale as wholesale. That sale will still get reported on your Department of Revenue filing, but it will be reported as a wholesale sale and you'll just pay B&O tax on it and no sales tax. If you're purchasing products to resell to your customer, same thing in reverse. You can provide your reseller permit to the company that you're purchasing from. They won't charge you sales tax. So that includes not just retail product that you're selling, it's also including subcontract services. If you are the general contractor, it also includes any materials that stay on the job site. So anything that's part of the job that you're delivering to a customer, not the things that go back to your location with you, not tools, that sort of thing, but the materials. If you were reselling something and you didn't use your reseller permit for whatever reason, there is a deduction allowed on the Washington State filing for the sales tax paid at the source. We still need all the information on that purchase, including the location where it happened. Keep those receipts and definitely make sure that your accountant is aware of them on a timely fashion. It's a challenging thing to keep track of, but it is an important deduction, so keep track of those. On the flip side of that, if you didn't pay sales tax on something that you should have, like you purchased materials using your reseller permit, but you used some of them for the customer, which was fine, but you used the rest perhaps for a project at your own location, built something at your own location for the business to use with some of those materials. Those materials are subject to use tax. Same with if you go out of state to make a purchase, or you purchase online from a seller that's not collecting Washington State tax. All of those types of purchases still need to be taxed to Washington State. You still have to pay sales tax. The state calls that use tax. In QuickBooks, you can track that by adding use tax to that transaction, and then it gets reported on your next filing with Department of Revenue. So Department of Revenue assigns every business a filing frequency, depending on how much you told them when you started the business that you thought your revenue might be. They may have you filing monthly, quarterly, or annually. You can always request to file more frequently. They tend to approve those. They don't tend to approve requests to file less frequently. And the more sales tax and such that you're collecting, the more frequently you'll want to get that remitted to the state. Remember that sales tax is a trust tax. It's not your money. You take it from the customer to pass it through to the state, but it's not yours. They get very upset if you don't pay it on time. They do charge penalties of 9% for the first month, and then it bumps up to 19%, and then it bumps up to 29%. So filing this one on time is really important. This filing includes not just retail sales tax that we've mostly been talking about. It includes your B&O tax, which is a business level tax on all of your revenue. Use tax, litter tax, lodging tax, all sorts of taxes. There are also some obscure credits, and we can help you navigate that if needed as well. Be aware that if you're shipping something out of state or you're traveling out of state to provide services, you may have a filing requirement in those states. Maybe a retail sales tax requirement, maybe an income tax requirement. So definitely make sure to talk to your accountant about any exposure you have outside of the state. If you are selling a retail product and you get an order out of state, say California, and you ship that product to that state, that doesn't trigger your need to automatically create a sales tax account in that state and collect that state's sales tax, thankfully. So in general, most states are using a threshold somewhere around 200 transactions into the state or 100,000 in sales into the state before you need to register. So if you're a small company sending a couple of products into the state, as long as they're not $100,000 each, you're probably going to be fine, but definitely keep track of that. And if you start seeing a lot of sales go into a particular state, definitely be on top of that. For those transactions, don't charge Washington state tax. They'll just have a tax of 0 until you hit one of those thresholds. And make sure that your accounting system is tracking by location so that you can see when you're starting to hit those thresholds and need to start reaching out to those states. Definitely let us know if you have any questions. If there are any questions that you'd like to see addressed in another video, I would very much like to hear that. And enjoy the rest of your day.